we say goodbye to Jenny, I want to welcome in Landon Swan, the co-founder of LikeFolio.com. And Landon, that's where I want to start. Is this a product that gets a major boost around the holiday season? Is it one of those things that people have high on a wish list, but maybe don't want to buy for themselves?
That's exactly right. That's what our data shows. Even diving into the tweets, I don't know that anyone buys these for themselves. It's a gift, and it's not always a gift that people ask for. I think it's a cool gift that you can give somebody if that's your price range, and everyone kind of appreciates it as a gift, but nobody really wants to go out and buy one. But a lot of people are giving them, and so when we look at our data, it's actually huge for fourth quarter, always for iRobot. It is the gift that everyone seems to give, and so that's obviously an important quarter. That's the one that's being reported right now, and you could see for a while it was uptrending data on Q4. Holiday season was always a nice spike. This year is a little bit off. It's pulled back somewhat. There's even, you can see kind of a COVID bump in there. So when people were staying home, they decided to spend maybe those stimulus checks on that as well. But off just a little bit as far as the height of this purchase intent bar. And that's the green line. That's people talking about buying or even receiving as gifts. We count that as purchase intent. A Roomba vacuum or one of the other brands of iRobot. Now, of course, the stock has been a little bit wild lately. It's part of that, GameStop phenomenon, short squeeze. As far as I'm concerned, though, I'm looking at Thinkorswim, and it looks like it's easy to borrow now. So I would say that the squeeze is likely over. It seems like it's kind of back into not quite where it was, but still on a more normal trajectory, at least over the last little bit. So I think the squeeze is over, but you never know, obviously, with a stock like this. So looks like to us, the fourth quarter may be just off a little bit, and projections for going forward may be off just a little bit. Our data has an earnings score. If you guys remember, we do earnings scores from -100 to +100. We're at a -11 on iRobot. That is well within the neutral range. So we're likely to be sort of avoiding it here, maybe lean bearish, but with the potential for a squeeze, that's putting me firmly on the sidelines.
Yeah, this is an interesting name, Landon, because you got to take all the fundamentals and the good stories about iRobot, and you've also got to put in a bunch of Reddit, boat people kind of stories about iRobot, and understand are you vulnerable to more downside based on the unwinding of this? It's kind of tricky, but your consumer purchase intent information. It looks like the graph that we don't see very often from LikeFolio, we see it infrequently, is the stock catching up to the consumer purchase intent. Am I reading that right? And then if I am reading it right, which I may not be, I'm putting that out there, how do we interpret that movement?
So really, you got to think about these two lines. If you look at that purchase intent chart, the green line is the 90-day moving average of people talking about buying or a lot of times receiving as a gift one of the products from this company, iRobot. The gray line is the stock price. They're on two different axes. And so whether or not they cross or line up is really fairly irrelevant. But what you're looking for is the change or the movement around these. And so, for a long time, if you look at 2019, as the stock is sinking, we were fairly bullish on it because the data continues to be higher. In 2020, that was their best as far as we're concerned, holiday quarter, and the stock was selling off, especially around March. So all that time looked really strong, bullish for us because of that divergence where the stock is going down and purchase intent's going up. Now the stock is wild, of course, but it is up to, if you kind of take out that squeeze up to 160 and look at it around the 120s or so, or maybe 130s, then it's kind of where it was maybe a year or so ago. So it's kind of in that range. We've got a slight pullback in the Q4. So I would say maybe we're approaching overbought. Maybe we're getting a little too high. And I think that some of this run that came from the squeeze could possibly be sold off a little bit. I think there's a lot of people who have profits from that squeeze that maybe if nothing great happens on this quarterly report, it could be time to jump ship. So that's what I would guess is going to happen. But again, anytime you've got a stock that can, close to double in just a few days because of a squeeze like that, it's going to have me very fearful to be on a bearish side of a trade. If anything, I'd be very, very risk defined, do maybe a spread of some sort or buy puts, but I will not be shorting or selling calls.
No, and I think it's a good takeaway too. I mean, you look at how jacked up the volatility is in here, almost 200% with a couple days to go. As you said, kind of neutral but slight bearish tilt. If you say -11, I believe you said. So that gives us kind of a takeaway. There's strategies that can fit kind of neutral to the slight bearish lean. But question for you from kind of an entrepreneurial standpoint and your analysis of social data, you know, ever since I've had one of these for the last couple months now, I guess since the holiday season, I tend to see on the internet now, or at least I'm more aware of them, the kind of meme treatment around this product, and it reminds me sort of what we saw around the beginning of COVID with kind of the hoarding and Costco. Is there kind of a free marketing element to kind of the viral videos and jokes around, buying a Roomba and then spending the whole day watching the Roomba? So like, does that stuff help kind of just natural free marketing for this company? Is that something that can benefit it in the long term?
Oh, it's huge. It's massive. I mean, you watch those videos of a cat riding on top of them or a dog freaking out when it fires up. They're awesome. I mean, and of course, everybody's going to watch them. And if you've never seen one of these vacuums in action, you say, "What's that?" And then someone starts telling you about it. So there's a huge viral nature to it. But as one of the, Megan pointed this out to me before I came on the show, just to kind of a point, the total mentions are actually not. They're falling behind purchase intent. So the virality of it is winding down a little bit. It's not done. They're still really cool. And these things are being shared all over. But I think that it's losing steam a little bit. And I think that's really important. Plus, they've got a ton of competition coming in. They're still the dominant leader in market share. I think they've got 82% in the U.S. as far as automated vacuums. So they're doing really well. And in the U.S. makes just up over half of their revenue. And the growth is tremendous in the U.S., I think plus 75% year over year. So they're doing really well. But I think they're going to have to lean less and less on those viral videos because they are starting to lose steam. I still watch them, but they do seem to be a little bit less prevalent right now.
Last thing here, Landon, before we say goodbye, how's the happiness score here? Is sentiment around this company hang in there? Is it more and more kind of in talks, even though that is falling off? Or does competition kind of lower sentiment as there's more options to go with?
Sure. This is one that's kind of wild. It's been flat on happiness for basically the whole time we've tracked it. It's about 67%, which, as you know, is pretty solid numbers. I mean, it sounds low, but when you consider people normally like to complain on social media, 67% is pretty solid. And even though, and what's interesting is around the holiday seasons, it doesn't really move. So when people get them as gifts, they're just as happy as when they buy them for themselves in non-holiday season. So strong there, and I think it's really just about this quarter. We'll see how they do. It's a huge one for them. Fourth quarter is massive for this company. We see it maybe being off just a little bit, but probably not enough to bet against.